Yo, what's up everyone? Welcome back to another episode of Weekly Roundup. My name is Frankie.
And I'm Ryan from the Coffee Break.
Yes, and special thanks to the Coffee Break as usual that help us to compile all the juicy news of the week.
What was the juicy news of the week?
Okay. Very rarely that we see a big cap stocks, like let's say 2-3 billion ringgit kind of stocks, one day can plunge 10-20%, right? But this thing happened last week, and that is CTOS. So in a span of just 1 to 2 days, right, this stock dropped from 145 all the way down to 110. That is about 27% of loss in just a couple of days. And something big happened to this stock.
So CTOS, do you guys know what CTOS does?
So basically, when you want to apply for loans, the banks don't know whether you're able to pay back the money or not, right? So one way to go about with it is all these banks or financial institutions, they will go to a credit bureau like CTOS, and they will buy a report that tells what is the individual's credit score. So if your credit score is very bad, chances are your loan may not get approved. But if it's good, then of course the bank welcomes you. They can make money out of it, right? So that's basically what CTOS does.
How legitimate is this that you have just talked about?
Okay, so
There is the dispute, right?
So that is the dispute that happened in the market last week that became viral in the not just in the financial world, but I think on the daily news as well. So what happened is that there's this businesswoman. She's trying to sue CTOS for inaccurate credit rating.
And she won the case. At High Court, at least.
At High Court, but I think CTOS is trying to appeal because they feel that they have a case to win it. Now, with my limited knowledge about how all this credit rating works, right, is that they will compile all the information about an individual from different various sources like Bank Negara or telco services to see whether you owe any phone bills that you never pay, electricity bills that you don't pay. They compile everything, and then they will come up with a score to see whether you are a financially healthy person or you are in a financial distress situation. Then from there, the bank will come to a credit bureau like CTOS to say, hey, I want to buy a report about this individual. And they say, okay, here's a report for you. And then based on the score, the bank will decide how much money to lend to the person. But the issue is, this businesswoman states that her credit score shouldn't have any issue, but the bank is rejecting her loan. And apparently the reason given was because her credit score was not good.
It was inaccurate lah.
It was inaccurate. Yeah.
But is it... CTOS then insisted it actually allowed to provide credit scores under the law, and this product has been in the market for more than 10 years, right? That we've seen banks use it, we've seen e-wallet players using this score to sort of find out what profile the customer is, right?
Yeah. So if you think about it, right, because a credit bureau business is to compute a score for a person. So technically speaking, this score is up to the company to decide what kind of score that they want to give based on your situation, right? I think why the businesswoman says that it is inaccurate is because, now, I don't have the full information, I'm just speculating. Maybe CTOS didn't update their database on time, and therefore, some of the information about this businesswoman was not in there to improve her score. So therefore, it was a bit disadvantage for her. So maybe that's why she felt unhappy, and therefore she filed the suit.
But it is also not the first time that CTOS have been faced with this kind of cases, right? So previously, it has actually won 12 defamation cases, and with 5 more pending. Denial of loans may prompt individuals to review credit reports for discrepancies, right, leading to potential litigation against these credit reporting companies, right? But CTOS is not the only player in town, I believe.
There are a few other players, right?
But anyway, so despite the huge drop in share price, it's not the end of the world for CTOS, because actually the share price rebounded the next day after analysts said the sell-off was overdone, following the management reassurance that the continuity of its operation was not at risk. Right? This was just like a blip. So the market reacted really quickly and actually rebounded the next day.
Because if you think about it, right, this businesswoman is trying to sue CTOS for just 200,000 ringgit. It is a small amount, and you are talking about CTOS, and CTOS is a 2 to 3 billion.
And it's only a high court
company.
anyway.
Yeah,
because so the company can still appeal, go through the legal means of doing so.
Correct. But what's more important is not the 200,000 ringgit, but the reputation of CTOS that caused the share price to drop more than 20% in a span of 2 days. So people are saying, hey, then should I trust this credit score and should I find alternative and things like that.
Is the business model working?
Yes, correct. So that is the main reason why the share price has dropped. But as you mentioned, within a couple of days, the share price started to rebound again, right?
So were you one of those that actually caught the knife?
Well, speaking about catching the knife, there's one big fund that is bold enough to make that move.
Which was?
So this big fund is a retirement fund, KWAP, right? So during this period of time, they not sure whether they are catching the knife or they are catching an opportunity right here, right? Because they wallop up some of the shares, and right now they are a substantial shareholder in CTOS. They own about 5.87% stake now after the acquisition of shares from the open market.
So one man's poison, another man's meat lah.
Correct.
Talk about KWAP also. I think there was also a report released last week that said that as of 31st December has a total gross fund size of 190.3 billion.
Wow, that's not small, man.
Yeah, and this is after adjusting its cumulative withdrawal of 20.5 billion for the partial funding of the government's annual pension obligations since 2018, right? And the MOF also reported that based on KWAP's unaudited consolidated funds actually total to 169.8 billion, marking a 305%
Growth, right?
Yes, and an annual growth rate of 9% since its establishment in 2007. So well done, guys.
Where do you think these gains come from? Because if I recall correctly, 2023 wasn't a very good year for Malaysian stock market, at least. Maybe the gain came from overseas investments? I'm not sure.
It could also follow closely what EPF is doing. Right? Because EPF is the private sector equivalent, KWSP, right? So KWSP also, I think, invested in a lot of
Tech stocks, overseas stocks and stuff like that.
Correct. So KWAP, actually, the fund generated an average return of 6.3%.
Wow. Not sure how much dividend they will declare.
Talk about dividend, another one of these GLICs, right?
Government-linked investment companies.
Right? So does Khazanah count as a GLIC, or is it a sovereign fund, right? It's a GLIC, right?
It's a sovereign fund, but it is also a government-linked investment company.
Yeah. So Khazanah in 2023 more than tripled its profits from operations due to high dividends, and it plans to focus more on home market this year. Profit from operations was 5.9 billion in 2023 from 1.6 billion in 2022, right? And with dividend income totaling 2.5 billion, primarily coming from Khazanah Nasional Bhd, IH Healthcare, and CIMB Group Holdings Berhad. The fund declared a dividend of 1 billion to the Malaysian government, doubled from 2022 as well.
I think this trying to focus the investment back on home market is also an initiative from the government, right? If I recall, I think I read somewhere that because of the depreciation of ringgit against the US dollar, I think the government is also trying to encourage our local investment firms to try to invest back in the home market, and that would help to increase the demand of the ringgit and therefore stabilize the currency.
Yeah. Talk about investments in local market. I think that's also one big news over the week.
Yeah. And that has to do with one new IPO that is coming to the market very, very soon.
That is the 99 SpeedMart IPO. The impending and highly anticipated, although it's just a draft prospectus, that will also reveal a lot of statistics on the company itself, right?
So this IPO is interesting in a couple of ways, right? One of it is that usually when a company goes IPO, they have to list a minimum of 25% of the stakes to the public, and therefore you qualify for the minimum requirement for liquidity in the market. But for this IPO specifically, they are applying for an exemption from the Securities Commission to say that, hey, I don't want to sell 25% stake of my company to the public. I only want to do it at 17%, which is very weird because if you do it only at 17%, that will affect the liquidity later on because the circulation of the shares in the market will be so small, it may lead to a consequence where this stocks is not liquidly traded in the market in the future. It may.
I mean, after all, it's called a public listed co, right?
But this is not so public because there's only 17% listed to the public.
So is it susceptible to like people cornering this share?
It's hard to say because a big portion of it will be offered to institutional investors and only 2.5% of the total is offered to retail investors. So yeah, in a way you can say that it's being cornered by institutional shareholders. But then again, how would this big chunk of shares being distributed among different funds? Then that would determine whether it is being cornered to a few investors only or is it well spread towards the entire market.
And this gave me another thought, right? That I think like for him, the valuation of the company doesn't really matter.
Why do you say that?
Maybe it's not like important factor for him because he's already a billionaire. Right? It's not like it matters if my price goes up a bit higher because you're listing so small portion, right? It doesn't matter if 20%,
Yes,
30%
the
more.
dilution is not big, it's only 17%.
Yeah, so it's not going to impact his wealth in a big sense. Like we talk about listed markets, well, you look at all the overseas, the Magnificent Sevens, 2.6 trillion, 3 trillion. I don't think it's after all that. Right? So the reason of listing, of course, it's stated in a draft prospectus, is listed as an expansion plan. Right? Part of its expansion plan to pare down debts. But the real reason remains to be seen because this company is only owned by two of them. I think the husband and wife. I think it's founder Lee Tianhua and the family lah. Right? But why would they list? Because after all these years, it's not like a big investor wanting to cash out.
Yeah, I think one of the reasons why you're pointing this out is that if you look at the dividend payout since 2020, they've been paying hundreds of millions of ringgit to the existing shareholders. And if you accumulate it in the next 4 years, the amount of dividend payout has accumulated to an amount of more than 1 billion ringgit already.
Which is also the amount that they want to raise, right? Based on reports like released last year, it was slated they are aiming to raise about 1.5 billion.
So on one end, they are paying themselves dividend. On the other hand, they are inviting investors to invest in the company and bring in fresh funds of 1 billion. But it's not to say the whole 1 billion goes to the company as well, because there's a portion of offer for shares, which is secondary shares. The existing shareholders will take out their shares and dilute themselves, and only a small portion of it is a new issue of shares. And it is this small portion of new issues, the proceeds will go into the company for expansion.
So it's
Question mark.
a bit peculiar one. But again, this is a draft IPO. Let us know if it goes to listing. Would you subscribe? There are some more nuggets, I think, in the draft prospectus, right? So it is the largest mini market player, commanding a market share of almost 40%.
Oh, wow.
In 2002, right? And number of customers served a day is 940,000 customers per day, based on its 2022 sales, right? The 942,000 customers, right? It's 2.8% of Malaysia's population. So out of 100 people that you meet every day, 3 would have gone to a 99 SpeedMart in the same day.
Wow.
Right?
Okay.
And the store is not huge, ma. The 99 Speed stores you usually go to is not huge.
Yeah, most of the time you're talking about maybe 2 shop lots, right?
Yeah, 2
Kind of
shop lots.
size.
And the ticket size, also not that big.
You're talking about maybe 20 over bucks per customer, right?
Correct.
Per visit.
Correct.
But anyways, this company has very big expansion plan. They are currently having 2,500 stores nationwide, and they plan to increase the number by 250 outlets every single year for the next couple of years. So they are looking at a target of 3,000 stores or even more in the future.
Aren't there enough 99 SpeedMarts already?
Maybe the more the merrier, right? Because it creates convenience for people to keep wanting to go back and buy things from them.
And
because,
also top of mind lah.
yes, top of mind, because wherever you go, you will just see 99 SpeedMart everywhere. And the fact that they provide value to its customers, because their business model is everyday low price, EDLP. That's their business model.
You actually remember?
Yeah, correct. So by providing everyday low price to its customers, it is one of the biggest moat of the company, because if the country falls into recession, people will look for value for money kind of groceries, right? But when economy is booming,
People also spend more.
People will spend more, and people will still want the best value out of the bucks, right? They will still go back to 99.
Recession proof.
Recession-proof kind of business model. Fantastic. So maybe the biggest question here is that after the company is listed, given the track record that it has been paying hundreds of millions of dividend, will this be able to sustain? And therefore, the new investors who come in can also enjoy this part of the pie. Chances is quite high lah, given that their 2022 revenue is at 8 billion ringgit. So it's roughly around 500 million of profit before tax. And if you talk about net profit, you take a couple of percentage off again. Yeah, it's still a very big number, and this number could potentially be given out as dividends to the new shareholders as well. So it is a highly anticipated IPO that everyone is watching in 2024.
Okay, I think that's all we have for the news this week. Let us know if you like the format that we're trying out.
Yeah, and if you prefer to listen to us, don't forget to check us out on the Spotify as well. It's called The Weekly Roundup by the FAQ Show. See you guys again in the next episode.
Remember to subscribe to the channel and also to the coffee break. See ya!
Bye.